Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.
If you're investing in the resource space, two of the best known guides are Joe Mazumdar and Brent Cook. Joe Mazumdar edits the Exploration Insights, and Brent Cook is an advisor. Gentlemen, welcome to Kitco.
Thanks, good to be here.
It's great to finally see you again in person.
Yeah.
Joe, we have had an interesting market. We've had the drawdown with what has happened with the inflation and the tightening with the Fed right now. I assume that we're taking a close look at what's happening with juniors and what the cash position are.
Yeah, I think access to capital and who actually has funds, especially I would say in precious metals, potentially less so in some of the minerals or metals people are calling critical. There's tendency right now to have a little bit more money and access to capital, easier access to capital for them. But for precious metals, it's harder to gain, especially if you're trying to draw from the retail sector. The money out there still, there's private money out there. And so if you're going to invest in a junior, make sure that they have capital right now and they have access to it. So if they do hit something, you know, they know where that they're going to get their next dollar from.
Joe, one of the things that I was like following you is just your analysis of what happens with the Q1s. The Q1s have been very interesting right now because of what's been happening with the cost pressures.
Yeah, well, so, you know, I talked about it last year because really a lot of the cost pressures have been happening for more than 4 or 5 quarters. And we've been seeing that embedded in the full years. And when I looked at Pan American, let's say, and they're not alone, almost every cost center had gone up. Whether it's consumables, labor, energy, everything gone up. You know, so it's like flat over the board. We're talking anywhere from 30 to 50% sort of costs. And then when you look at capital costs, we're seeing the ones that are getting into the news the most is the marginal grade, large milling open pit operations in Northern Ontario, like your Cote and your Magino, that we're seeing, you know, 50% maybe increases in capital. And I don't think we're done there. After having feasibility studies, which are supposed to have like a 15% error, but we're seeing 30 to 50% run-ups in capital. Some of it's scoping, but a lot of it's also cost inflation. Now we're seeing, like you're saying on the Q1s, Brent and I were looking, and then we're seeing some of the precious metal companies with all-in sustaining costs that exceed the gold price by about 30%. So they're well into the 2000s right now, whereas we're looking at about 1800 for the gold price. And so definitely we're seeing that across the board. And the tough thing for those guys to raise money is they're seeing their revenue line go like this, flat to down, and a negative sentiment, but their costs are going like this. So they're getting squeezed right now. But thankfully, a lot of those precious metal companies, as I'll talk about in my talk tomorrow, is balance sheet wise, a lot of them are in a much better spot than they were in the tail end of the last cycle.
Where's the cost coming from? Is it just energy, or are they just getting it from all sides?
It's everything. Like if you're ordering parts, the supply chain is slow. You don't get the parts. You're hanging on and doing something that you didn't want to do longer than you planned on doing it. Productivity is lower, and that's costing more because the labor is not there. Then obviously energy prices, where people were assuming $50 to $60 oil, you're dealing with $100. You know, and then supply chain, everything like that, and people.
Yeah, people are hard to come by these days, really hard to come by.
The other piece also would be kind of the geopolitical concerns as well. I was looking at your presentation for about a month ago, and then just talking about how difficult it is right now to seem to actually develop mines. So you see what was happening with Ambler right now up in the Alaska. Also the latest news that actually happened with Rosemont, correct, yes, thank you.
Yeah, so like we like to think that the States, where Brent is from, is geopolitically benign. But we've seen a lot of, under the current administration, where people that have had permits, like the Ambler Mining District or the Upper Cobalt Mineral Property joint venture between Trilogy and South 32, they had that permit for like 2 years. This is a document that's like almost 1,000 pages, 5 years of work, basically gets suspended. It goes backwards. And now with Rosemont was different in the sense that, you know, one judge had said, that they didn't do enough work. The U.S. Forestry Service, the company appealed, and now that appeal has been pushed back. So that's definitely negatives. And then what we're seeing in Minnesota as well with the Antofagasta project there. And so my question isn't sometimes with a company I've just spoken to is like, yeah, you do have that permit, but is that really, is that it? Is somebody going to come back and say that permit's no longer valid and take it to court? Whereas you think that the permit is real and you have it, but can you lose it now? And so there's a lot of uncertainty in the States right now. I would say less in Nevada, but everywhere else is on in terms of, especially if you need a federal permit.
Brent, one of the things that I see in your social feed that you bring up once in a while is, has the investor considered metallurgy? It seems to be one of those things that's kind of out of the blue, you would say, but it's also something that's going to be kind of vitally important.
Metallurgy is always important, which is basically what your percentage recovery is and how you're going to get it. For instance, a good solid company, once they think they've made a discovery, they start looking at the metallurgy right off. You look at a company like Liberty Gold, who've got oxide gold deposit. They do their assays, and they do an acid leach assay as well to give them a sense of what the recovery is going to be on that. So it is certainly critical. And what's happening now more and more is, because we're looking and finding blind, deep deposits, they tend to be more metallurgically and geologically complex. And so that factors into it as well. If you got near surface things, it's cheaper to mine. Often it's oxidized and that works well, but as you get deeper, it gets more complicated. And then you throw on top of that the timeline to drill it out, the cost to drill it out, permitting issues. You get a big pit, either you got too much water, not enough water. It's getting tough, but that bodes well for a legitimate discovery. Mm-hmm. I think that's really the key, is what Joe's focusing on, and I as well, is this a legitimate discovery that's going to be actually permittable and mineable? And if you can find one of those, you're doing well.
Now, I would just add the other thing is water. Throughout the Western U.S. right now, drought conditions, access to water is difficult. And I've also seen that in parts of Europe as well, where even drilling, they say, well, we can't get the water locally anymore. We're going to have to truck it in. So all that adds to drilling expenses, but when you're a mining operation or a development operation, then you need to find a source of water that you don't compete with anybody. Because if you're going to compete with a rancher or a local town, there's a good chance you're not going to get it. So you definitely, the water is critical, even more critical than it has been.
Well, you're just a silicon, Anglo's discovery, and unless I misunderstood, one of the primary reasons Anglo acquired Corvus was for the water rights, not necessarily the gold deposit.
Exactly, and that helps the permitting, and that helps the development timeline once you have the water secured. And if we remember back to Frontier Gold with their Long Canyon deposit, as soon as they started sorting out the geology and the resource, the next thing they did was acquire land with water on it. Liberty Gold doing the same thing. They're right now trying to get all the water required for the size of the plant that they think that they're going to have in terms of the heap leach. And that's absolutely vital if you're going to get taken out, that you have to have the water already done. And what you need is isolated aquifers that nobody else can access. And so if you are out there investing in this world, water has become more and more problematic, and mining has taken a back seat in terms of access to it.
Let's talk the precious metals, and let's talk about the companies in the space right now. So what we've seen is like the senior gold miners, we've seen like a large run up. For instance, GDXJ, when I last look at it, it's been down since year to date as well too. So people are saying maybe look at the streaming and royalty companies, just because you get a protection from what's happening on the energy costs right now. What kind of looks good? What looks kind of cautious right now?
Yeah, so that's what we have been doing in the portfolios. We've been moving towards a few more royalty companies, and selling some of the production, because the costs are not being compensated by the revenue.
Yeah.
because again, they're flat to down, but their costs are going up by 30%. So then the royalty space, okay, it's a royalty, it's great. As long as it doesn't put the asset at risk of being shut down, the royalty company will still make money. And so definitely there's, especially in the precious metal space, a migration basically towards more precious metals royalties. But the problem with that space is it's hyper competitive. There's too many royalty companies, too few royalty assets. So one big thing that you'll see is a continuing consolidation of that space, because it's becoming harder to acquire royalties, potentially easier to consolidate companies.
On the energy transition side, if you're wanting to get exposure to that story, what are you actually looking at?
Companies, because like I said, it's easier for them to raise money than it is for. So I've been meandering the portfolio more away from precious into things like copper and nickel.
Mm-hmm. Is there any names? Is there any ideas that are working right now that you want to give?
Yeah, and so I did that with my subscribers last week to give them a qualitative assessment of the portfolio in terms of where I think the management teams are, access to capital, jurisdiction, stage, and all that. And, one thing that stands out would be, a liquid name as well. Liquidity is important in this current market. Would be one of my top picks, which is Arrow Copper. So I visited that earlier this year, and it's a nice, big, huge copper operation that's with growth. Most operations don't have growth, they do. But what's interesting, what stood out from the site visit, there's no constraints with respect to water or power. And so when we talk about cheap power, we're usually talking about 7 to 8 cents per kilowatt hour, which is cheap in hydropower. Those guys are talking 3.5 cents per kilowatt hour, and which is ridiculous. And then also there's no water constraints, because they've got a pipeline going straight to the reservoir to where they are. And so all their growth doesn't have that kind of resource constraint for them. So that's one that I would recommend anybody taking a look at who are interested in copper growth, and fully funded in the sense that they went to the market and got a fixed senior loan, which they do not have any access to capital issues for their growth profile. People are worried.
Lastly, guys, what has been your favorite mine trip or a favorite getaway since this pandemic's got behind you? It's the first time seeing you live instead of behind a Zoom.
Well, you went to Grand Canyon. You had the rafting?
Yeah, I went rafting through Desolation Canyon. Went out on a boat in Lake Powell, but I haven't really been out of the country looking at deposits since it was possible. It's still a hassle. Joe's been going everywhere. I'll be in Australia in a month, and I'm not sure where else yet.
Joe?
Well, I mean, like Brent said, I mean, pretty busy. Spain, went to central Argentina, then Brazil, made a trip to Nevada, and then right after this conference, I'm heading to Arizona. So yeah, it's great to be able to get out and see projects again.
It's great to see you both.
Thanks, Michael.
Thank you very much, gentlemen. I'm with Joe Mazumdar and Brent Cook with Exploration Insights. My name is Michael McRae, and you're watching Kitco Mining.
Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.